Tuned into a halftime report on CNBC TV 18. Well, let's talk about one particular company. Mass Financial is the next management on the show. It witnessed what was strong disbursement on a year-on-year basis, but the net interest margin came under pressure. To discuss this and more, we have with us Kamlesh Gandhi, who's the chairman and the MD of the company, joining in to discuss this quarter gone by. Mr. Gandhi, hi. Thanks very much for joining in. If you could just start by talking about this disbursement growth, what led to this strength this quarter? And what are you guiding for?
Good afternoon. So if you see our performance for the quarter in terms of disbursement remains steady. And we had always prioritized risk management and profitability over just the disbursement and the AUM growth. And just to add to that, we are satisfied with the efforts that we did as a team to maintain the quality of the assets during this very trying time. So going ahead, we would like to say that we will be in a position to grow anywhere between 20 to 25%. That has been our stated objective since long. And we will endeavor towards that stated objective.
All right. Hi, Mr. Gandhi. Good day and good to see you in. This is Nigel on this side. It's been a while since we spoke. So you're saying around 20% growth. That's in dispersals, right? What about AUM growth? Where do you see this number move? I think the last recorded number we have is around 12,100 crores is your AUM. How do you see this number trend up in this year and say with a 3-year time horizon?
See, when we talk about the growth, we usually talk in growth of AUM because the disbursements differs upon the product and the tenure and many other factors. But we try to maintain the growth on AUM because that really makes a difference in terms of our earning. So the AUM growth will be around anywhere between 20 to 25%, depending upon the market situation that we face from time to time. And yeah.
Yes, go ahead, sir.
And
you wanted to make another point. Please go ahead.
And as I shared earlier, the priority will be that how we maintain the asset quality given the current situation.
Okay. If you could just narrow in a little bit on the micro enterprise segment, what are you facing in terms of this quarter? What were the key trends that took place? And are you seeing any kind of improvement there? And what are you guiding for?
So as far as micro enterprise loans are concerned, just to share with you one of the oldest finances in this segment, we have grown in a very calibrated manner over all these years, have again the niche expertise to manage this segment. So during this quarter also, there were some accelerated write-offs because of the overall situation. But overall, we could maintain the quality of the assets. And if you see that segment has grown at a slower pace as compared to other segments. So the growth in micro finance has been on a year-on-year basis at around 9%. And that was a deliberate move on the part of the company to be cautious in that segment.
Got it. Okay, all right. Let's get a couple of numbers going then. What kind of NIMs should we be working with from here on?
So we have always maintained that we'll have range-bound NIMs anywhere between 6.75 to 7.25%. Depending upon the interest rates and what yields we can charge at the market. If I talk about the current year we could maintain the yields at around 7.1%, the NIMs at around 7.1%, and that results into an ROF close to around 2.8%.
Okay. If you could just narrow down, Mr. Gandhi, on your two-wheeler and your CV segment, your commercial vehicle segment, both of those segments were quite sluggish sequentially as well if you look at the assets under management. Give us a sense in terms of the trends there, especially in the two-wheeler, which saw a decline of almost 3% Q on Q.
So that is a general market trend. Q3 is characterized by the festive seasons. So during festival season, the Q3 numbers are higher. So usually the Q4 numbers are lesser as compared to Q3, and that is in consonance with that trend. And even in our commercial vehicle segment, Q3 is usually strong as compared to Q4.
Okay, all right. But are you observing pain in micro enterprises, and how long do you think this pain will last?
I think the micro enterprise loans in particular will see some headwinds still on the asset quality for a quarter or two, depending upon the working of the company. But if we share our working, we have been very cautious and we have been in a position to maintain the overall net stage 3 asset, which is at around 1.62%. And even in micro enterprise loans, we could maintain it within the stated objective.
So I'm not sure if I missed this, but if you could give us your specific gross NPA ratio guidance going into FY26?
So we have always maintained a range bound NPA guidance. That means we will be anywhere between 2 to 2.5% on GNPAs and around 1.5 to 2% on NNPAs.
Okay. All right, sir. Appreciate you joining in. Thanks a lot for giving us some clarity. So just to revise those numbers, the AUM growth will be in the vicinity of around 20%. Your NIMs will hold at around 6.75 to around 7.25%. Thanks, Mr. Gandhi, for joining in and filling us in with all of those details. Well, time to slip into a short break. But as we do that, here's some good news coming in for our viewers. India's business news leader is now just a click away. Introducing CNBC TV 18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates. All of this at your fingertips. Download the CNBC TV 18 app now from the Google Store or the Google Play Store, or just scan the QR code that's up for you on the screen.